Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Here is an article from fortune.com and it starts, the housing market correction takes an unexpected turn. Yes, it has taken an unexpected turn. So check this out. Let's read a little bit. Now I will have a link to this article down in the description below, plus some other links that you guys that is going to help you guys kind of get a better view of what's really happening in the housing market. Now check this out. The Federal Reserve has a simple inflation fighting playbook. It goes like this. Keep applying upward pressure on interest rates until the business and consumer spending across the economy weakens and inflation recedes. So you guys understand what that means, right? That means that right now, the economy is too hot. And I know a lot of you guys might think like, well, isn't that good that the economy is hot? Well, it's not that good. Why? Because what's happening is the prices are basically running away from us, right? There is too much money in the market right now, in their communities. Basically, in the last 2 years, the government essentially printed $10 trillion. It gave us record low interest rates. So all that money, free money, got into the economy, and that basically it made the economy, it was like throwing gasoline to a fire. It made a huge ball of fire. Now to some of us, you know, we might think like, oh, more fire means better, but as a matter of fact, more fire is not better, because the way to keep the fire that hot, you gotta keep throwing more gasoline on it. It's basically like you need to print more money, but at one point you need to pay that money back, right? And that is basically when everything comes crumbling down. So what does the Feds do? They basically raise interest rates to deflate the economy. It's basically like throwing water into the fire, because they know that a society cannot sustain itself with a huge flame, right? They need to bring it down to an acceptable level where everything works better and it's a slow growth, right? Now, to a lot of people, they might not understand, why would you want slow growth? But basically, it just has to do with the way everything moves, and the best is, you know, a 2% inflation. That makes the economy move really smoothly, right? Versus now, you know, we're upwards of like 9, maybe 10% inflation. It's just basically the jobs are not going to pay enough to people to be able to make a living, and that is the problem, and that's the problem that we're having. So as we keep reading, on average, over the past week, mortgage rates have declined fast. As of Tuesday, the average 30-year mortgage rates sits at about 5.05, down from June when mortgage rates peaked at 6.8. Those falling mortgage rates give sideline home buyers immediate relief, as if a borrower in June took out $500,000 mortgage at 6.28% rate, they would be paying $3,000 monthly in principal and interest. At 5%, they would be paying $2,600. Okay, that's a $300 difference. That's a big deal. Over the course of the 30-year loan savings is about $140,000. That's what basically the interest rates are going to do. What's going on? As a weakened economic data rolls in, financial markets are pricing in 2023 recession that's putting downward pressure on mortgage rates. The bond market is pricing in higher probability of a recession next year, and that the downturn will prompt the Fed to reverse course and cut rates. So basically, we're in a very interesting situation. The rates are going up, but the banks are still now cutting their profit, right? So they're gonna, you know, because we just raised rates like not too long ago, like last week, right? And yet mortgage rates right now have dropped a little bit. Now that's kind of doesn't make sense. Like they should be going up, but the problem is that they're anticipating a recession. So now everybody's kind of freaked out. And in a recession, the way you get out of a recession is basically you lower the rates. But the biggest problem right now, the big elephant in the room, is inflation. We need to tamp it down, because if we don't, we are going to be in real trouble. Here, let's read this quote. The bottom line is that the recent decline in mortgage rates will help at the margin, but housing market will remain under pressure with mortgage rates at 5%, fewer sales slowing house price growth. So if we include the increase in house prices, payments are up more than 50% year over year on the same home. That cannot be, guys. It's just crazy. While lower rates themselves are positive for housing, that isn't the case when accompanied by a recession and quickly rising unemployment. So we are looking, guys, at a big downturn, right? Right now, if you're looking to buy a house, the best thing you could do is just wait, because I do believe it's going to become an amazing market if you're looking to buy. And if you're selling, man, you better put your house up on the market as quickly as possible, because your window is running out. Now, I am not a financial advisor, but these are all my opinion, right? Now, I do stay pretty informed, and this is just how I see it. Now look, one last quote. Whether we're technically in a recession or not doesn't change my analysis. I'm focused on the inflation data, and so far, inflation continues to surprise us to the upside. We are committed to bringing inflation down. We're going to do what we need to do. So guys, I don't necessarily see the rates going down, okay? As a matter of fact, I see the rates continue to go up. So with that said, what is going to happen in the next year? Well, I'll tell you. If we look at the Redfin weekly housing market data, this is the median sale price right now. This blue line is 2019, black line is 2022, 2020 is red, 2021 is orange, and we're right here. Look at this huge increase. We went from 278,000 to 385,000 in like 3 years. This whole thing should have not happened. This growth was, we cannot grow this fast because our communities are being priced out of the market. That means that people can't even afford to live where they work, right? And that has to change. So we are definitely going to see this price right here. I believe it's gonna go down to the 2019 levels. So if you're, like I said, if you're looking to buy, just wait. If you're looking to sell and you still wanna get a good price for your home, this is definitely the time to do it. Now, if we look at Redfin housing downturn risk score, if you live in any of these red cities, you're basically you're gonna have a higher chance of a downturn right here. Boise City at 76%, 77% chance of it going, basically down. Versus some of these blue cities, which are probably going to retain their value. Now you can see that definitely the southern part of the United States with better weather has seen more increases, and now as a result, they're more likely to take a big dive. So if you live in any of these red dots right here, you want to wait, you want to save for a big down payment, and you want to get ready to strike. Now, there was a lot to take in on this video, guys. Things are changing and it's getting all weird. Housing market is definitely weird. That's why I'm making these videos, to make sure that you get the latest news so you could be the most informed to know, what to do. If you're selling, if you're buying, if you're renting, this is where you want to come to basically make sure that you have the latest news so you can make the most educated decision, and that is really what it's all about. Now, thank you guys so much for watching. If you guys like these videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.